Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 9 from the Digital Study Guide. That they are the exercises for Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so we are working on 29 here. Okay, it says here, Ozark Publishing completed the following transactions during 2014. Okay, journalize these transactions. Explanations aren't required. And 2, what amounts would Ozark Publishing Company report on the balance sheet at December 31st, 2014? Right. So transactions. Right. November 1st, sold 56-month subscriptions, collecting cash of $2,400 plus sales tax of 4%. Okay. We're collecting cash. So am I in making the journal entry? Am I affecting cash? Yes. Right. So I'm collecting cash. So my cash is increased. So I'm going to debit my cash. Now the question is how much, right? So I got $2,400 for the 56-month subscriptions plus 4% sales tax. I don't know how much the tax is, so I have to calculate it. And 4% of 2,400 is 96. So 2,400 plus 96 is 2,496 that I've received in cash total. So my debit to cash is going to be 2,496. Debits have to equal credits, so I credit something else. Well, I'm selling the subscriptions, so my not sales revenue, it is unearned sales revenue. Okay, as you saw, and this will be a common mistake for everybody. As you saw, I just wrote sales revenue because why? I didn't think about it. Okay, I just automatically went and said, oh, okay, unearned sales revenue. I just went and said, oh, I made sales revenue. But the issue here is that this is unearned sales revenue. Why? Because they're subscriptions. Okay, it's a 6-month subscription. Right? Think of it this way: if I buy a cuckoo clock for $100, okay, I'm buying that one clock. That's my revenue, right? So that's sales revenue. And if it gets returned, I'm going to end up giving back the $100. But when I'm looking at a subscription, okay, I may earn the $100, right? And I'm just using a different number just to make things easy here. But let's make it $120, right, to give you a better idea here. If it's a 12-month subscription at $10 each, right, when I get the subscription, they're going to pay me $120. So that's $120, but is it the same as the sales revenue? No. Why? Because over the 12-month period, right, however, make that 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then 12. Over this 12, they're getting the subscription here on, say, 1/1, and this is December 31st. Okay, we're getting this $120 on 1/1, but we haven't earned it yet because it's subscription. As each month goes by, all right, then we earn the revenue for that subscription. Okay, it's the same as prepaid rent, that type of thing, that concept, right? So by having this being a subscription, we can't just automatically say, oh, this is sales revenue. It is unearned sales revenue, and then each and every accounting period, we're going to have to make the entry, the adjusting journal entry, in order to record the earning of that revenue for, over the course of time. So that's why the account is unearned sales revenue and not sales revenue. Don't make that common mistake. All right, as you saw, I just quickly put down sales revenue, but then I glanced up and it's a subscription, so it's unearned sales revenue. Right, so then the remainder of the entry will be, of course, to, for my credit for sales tax payable, $496. Okay, so I hope that was kind of like clear, right? Remember, prepaid and unearned are two sides of the same coin, just like accounts receivable and accounts payable, right? If you understand accounts receivable, then you understand accounts payable, because it's just the opposite. If you understand prepaid, then you understand unearned, right? Prepaid is an asset. Unearned is a liability. And this subscription is still a liability because you owe it. If the person goes through 6 months of the subscription, you've only earned that 6 months out of that full $120. You've only earned $60 of it. If they want to cancel, you're going to owe them the $60 that you've collected but haven't earned. Okay. All right. So now December 15th, remitted the sales tax to the state. All right. So am I affecting cash? Yes, I'm paying cash out, so I'm going to credit my cash for the amount of 96, and I'm going to debit, my sales tax payable, because the sales tax payable, because I'm offsetting that account so that the balance in that account ends up being 0 for the tax. Right, on December 31st, made the necessary adjustment at the year end to record the amount of subscription revenue earned during the year. Okay, so let me erase all of this and draw a timeline so we can see where we're at. All right, so this is right now November 1st. It's a 6-month subscription, so on 12/31 we get to the end of the year, we have to make an adjusting entry for this period of time, and this is a 2-month period because this is November 1st, and they're using December 31st, right? So this is 1/1, this is 12/1, right? So that's 1 month, and then from 12/1 to 12/31, that's 2 months. Okay, out of the remaining 6-month period. 1, 2, 3, 4, 5, 6. So this is the 6-month period. There we go. So 2 months out of that, we have to make an adjusting entry to record the amount of subscription revenue earned during the year because 2 months have gone by, right? So if we have $2,400 of subscription revenue and we've earned 2 months out of the 6, okay, 2,400 times 2 is 4,800 divided by 6 means $800, right? So I'm going to be able to record so I'm going to credit my revenue, subscription revenue, whatever you want to call it, for the $800, and I have to offset my my unearned revenue right here, right? Because again, we're booking, this is unearned. Now we're actually booking the revenue. So I have to offset that unearned revenue by debiting that account. For the $800, right? So I have, I had a credit and now I'm debiting it. When when I make the adjustments for these remaining periods, right? My unearned, in my T account, I had $2,400 as a credit for the unearned service sales revenue. Oops. And $2,400 when I make the adjusting entry of 8, right? Now I have a balance of $1,600 in there. Okay. And as I make the future adjustments, right, I'm going to be debiting that account until my balance gets to be 0, right? So that's why I'm debiting it. Remember, use your T account in order to understand what you're doing if you can't see it in your mind. Okay. Right. So that was okay. Now number 2. It says here, what amount would Ozark Publishing report on the balance sheet for December 31st? Okay, so on the balance sheet, if we post these entries, right, which is what I'm kind of doing by showing you the T account here, that means on our balance sheet, under the current liability section, we're going to have an unearned sales revenue account, and that's going to show the $1,600 balance, okay? Because the balance in the account is $1,600, right? And that's under my current liability, and it's current because current is between now and the next 12 months, okay? All right, so that's it for this exercise. If you didn't understand some of that, go back and watch it again. And if you don't understand other concepts like current, that type of thing, you'll have to go back in your studies and the other videos in the textbook and study that. And if you still don't get it, then feel free to contact an instructor. Okay, see you in the next video.